Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. The European Central Bank decides to extend keeping interest rates at record low levels to support the euro economy. Tata Asset Management Company becomes the first mutual fund to side pocket its exposure to DHFL after rating agencies downgrade the debt to default. Azim Premji will step down as Wipro chairman after spending more than 5 decades at the helm. Son Rishad will take over the baton. Prime Minister reconstitutes the Niti Aayog, includes Finance Minister Nirmala Sitharaman and Amit Shah and Rajnath Singh as ex officio members. Bibek Debroy steps out. Well, let's take a look at the trade setup for the day. There seems to be a bit of a risk-off sentiment that is shaping up across the world, and I've got 2 or 3 charts to make my point out here. Will come up on your screen step by step. Essentially, what's happened to the US markets or the other markets is okay. But look at these 3 charts. First, the market mismatch. Yield inversion signals recession while stocks are hovering near the record highs. The question that a lot of people are asking is that if this is indeed the case, for how long will this last? And therefore, should people buy protection, or are people already buying protection? That's the key thing, right? So this is the first one as far as the US markets go. Then you shift focus to what's happening across the world. And China, you can argue that it's an isolated market. It does what it does and doesn't quite reflect what's happening to the economy. But hey, the small caps in China have entered the bear market territory, and that shows there is a risk aversion as far as Chinese stocks go. The market is not expensive. The trade war is hurting them, yes. But bear market territory is quite a telling statement. And if all of this is not enough, you have to take a look at what gold is doing. It's now approaching 3-year high levels, spot gold buying. And this is typically an indication of how people are looking at buying some hedge and protection into precious metals, into safe haven. Now, I might be speaking too soon. Maybe this is not indeed going to be the case. But when a confluence of factors point towards something, it's our job to point that out. Did we see that in our markets as well yesterday? Maybe we did, because there was a bit of a pullback and a sharp one at that, despite the world markets looking okay in trade yesterday. So we came off, and we came off quite rapidly after the policy, despite the fact that the policy was accommodative. So about 1.48% higher in trade for the Nifty, 88413 for the index. But the key point is that there was some bit of protection buying that we saw, and heavyweights held fort. So yesterday, defensives held fort. It was only defensives. Coal India, Power Grid, HUL, to an extent Titan. It was essentially the defensive bent of the market which came to the fore yesterday. All high beta corrected. And there was fair degree of option buying at the 12,500 call, but more importantly 11,500 put. All of these saw some significant buying. Now, you would buy that 11,500 put if you believed that there was going to be some bit of downside and you want to have some protection. FIs sold, and this is evident. We spoke about in the market wrap yesterday that it shouldn't surprise anybody if FIs would have sold out, because yesterday the nature of the stocks that fell suggested that it was FI selling that would have come in. But the option buying is interesting. There's some bit of protection that people are buying. Having said that, it's just virtually very, very difficult to figure out what the markets will do on a daily basis. We don't do that out here any which ways. What we try and do is tell you about what the trade setup is looking like and what individual stocks would be doing or could be doing. So firstly, the one stock in focus, Diwan Housing, cracked big time yesterday, but Bloomberg News is reporting that Blackstone plans to transfer funds for the Aadhar Housing Finance sale on June 10th, and that DHFL will use these monies to pay debt of the group. So the Vadhavan Group and DHFL firmly in focus. Let's see if this brings about some change of sentiment in the stock price, not necessarily in what happens to the ratings, but in the stock price. So it'll be important to watch out for this one. Important to watch out for Indiabulls real estate as well. Promoter stake sale plan, intend to sell 14% stake to third-party investors at the current market because they want to focus on the financial services business. And you know, the current promoter stake is at about 38.72%. So this is interesting. It had gotten Indiabulls real estate excited in trade yesterday. Let's see what happens in trade today. Very high volumes as well. But speaking of Indiabulls real estate, the Times of India report suggests that Embassy Groups is close to buying the largest stake in Indiabulls real estate. So, well, let's wait and watch. It could be a JV with somebody, and there will be a mandatory open offer that could follow for the majority stake as well. But Indiabulls is showing its intent. Times of India is saying that Embassy REITs is in focus. Somebody is going to buy that. Maybe it could be Embassy REITs. Let's wait and watch if that, which is listed, could be in focus as well in today's session or no. Otherwise, a day which is not quite full with news, but these 2 or 3 stocks should keep things in action today. Let's tell you what's lined up on First Words, the collection of the top editorial stories that we bring to you. First up, did portfolio managers manage to beat the benchmark indices in the month of May? Sajid has the answer. Broader markets have been battered over the past few months, but analysts find select stocks that could spring a surprise. Devina tells us all about it. Darshan then Johnson to tell us how Indiabulls Real Estate may soon have a new promoter. And as Azim Premji chooses to return back to the pavilion, Agam traces his career path and how he took Wipro from being a cooking oil maker to an FMCG to IT giant. First up, portfolio managers have managed to get a better return for their clients in the month of May. The average return beat the Sensex after 2 months of underperforming the benchmark, but that's not quite managed to improve the overall picture for the portfolio managers. Sajid Mangat is here to tell us why. Sajid, good morning.
Good morning.
We always mention this, remember viewers, that we don't look at month-to-month performances to analyze what portfolio managers do, but it's important to figure out what these guys have done every single month. And Sajid gives us this picture. Sajid, how is May looking?
You know, you're right. We don't look at month to month, but the point is that we want to look at how portfolio managers are trading the markets in the month, and it gives a fair idea of how it's reflecting there. We saw in the month of April that many of the portfolio managers had hedged their positions, and as a result, the returns were much more muted in April. That changed in the month of May, especially in the second half of May. If you look at the Sensex returns, and that gives you a good idea of how many of the portfolio managers may have worked. The Sensex gave nearly 4.5% of return in the second half after May 20th to May 31st. That's when many of the portfolio managers shifted the entire onus of going from hedging a position to directional bets. Now remember, May 19 was the last phase of election, and we saw exit polls coming in, and it gave a fairly good idea of how it worked with respect to how the directional bets were going on and other stuff. So we saw that happening in the broader indices, and that's got reflected in the portfolio also of some of the portfolio managers who had taken a blue chip bet going into May, and we'll see that as part of returns as well. So if you look at the the month of May, the average average return for the 50 portfolio managers was around 2.3%. This was much higher, little higher than what Sensex gave of 1.75% for the entire month, and most of the returns coming in the second half of the month. And that's what when some of the fund managers we spoke to said that holding it steady and waiting for the binary event to come through will give you a return as soon as you take the directional bet there. So many of them took that bet in the second half, and that ensured that they had a positive return which is going on. But on a 12-month basis, we still have a position where portfolio managers are making negative returns of negative 1%, and Y to date, they are around 4%, but that's much lower than what the Sensex has given, nearly 10% return Y to date for that purpose.
Okay, so well, that is essentially what's happened in the month of May. For the details for this story, and if you want to know what individual managers have done, what are the bets, etc., you can log on to our website, bloombergquint.com. This is the story written by Sajid. Portfolio managers should thank Modi for the rebound in the month of May. Do log on and do read that story. As also the next one, because Sajid, thanks so much for this. The broader markets have stayed away from a sharp rally for quite some time now, but the government's mandate has prompted investors to expect a sharp rebound in beaten down mid-cap and small-cap stocks as well. Devina has put together a list of the top 10 beaten down stocks from the mid-cap space, where analysts see double-digit returns over the next 12 months. Devina, good morning. Let's first start with the selection criteria.
All right, so this is the Nifty Midcap 100 Index, and amongst this, you have a set of losers, and within those losers, the top losers which have got double-digit return potential over the next 12 months, according to an analyst poll of more than 10 analysts who track that particular stock. So it's a fairly widely covered list, and we have 9 stocks that fit that bill. So far, we've seen that the Nifty Midcap and the small cap indices have grossly underperformed the benchmark index, where the Nifty for 1 year has returned 10%, Midcap is down about 5%, small cap is down about 15%. So that's about a 25% underperformance to the benchmark index itself. So within this space, these were the stocks that were heavily beaten down in the last 1 year. They didn't give any returns, but they have the potential to return in double digits. So which are those stocks? And also the fact that most of these stocks, you've actually seen that the valuations have come off. Now, if you take a look at, and one particular chart that I want to look at is the deviation of valuation between the mid cap and the Nifty 50. That valuation discount has actually widened and has come down to -1 standard deviation according to that chart. So the last time we saw this going massively in favor of the mid caps and small caps was in that period between 2015, 16, 17. And that's the time where the mid cap flurry started, and you had a lot of interest in the mid caps and small caps. But suddenly that has completely reversed and is now touching -1 standard deviation, which could indicate that there could actually be a turnaround. So starting off with the list of stocks where you could actually see some momentum picking up according to analysts. So Coromandel International is the first one. Year to date, 1 year returns have been negative, but the stock has the highest potential of about 24%. Obviously, the government focus on agriculture, rural economy, that is likely to support the kind of pricing activity that analysts expect on this one. Max Financial is the other one, 24% return so far, -7%. Escorts, Oil India, Apollo Tyres is the other one as well. Remember, crude oil could be a very near-term catalyst for Apollo Tyres because we've been seeing crude oil coming up sharply. Raw material prices can actually work in favor now for Apollo Tyres, and which could aid it in the near term. So profit potential there is 21%. Emphasis is the other one where the profit potential is about 20-odd%. You've got Castrol, which is, with the auto and industrial lubricant maker. It's able to maintain its market share so far, and it's driven by expanding distribution and reach and an increase in product offerings, and that continues to be its glide path as well. And that is why analysts expect the stock to give you returns of more than 19%. M&M Financial, a strong name within the particular space. Jubilant FoodWorks as well. We've been seeing it struggle with the same-store sales, but analysts are anticipating that product innovation and technology improvement will improve its presence and customer analytics, which will help both Domino's and Dunkin' Donuts stores in India. So that can be a near-term catalyst for Jubilant FoodWorks as well. Compare that to the valuations. So their valuations as well, compared to the last 5 years average, has been on the lower end. Price to earnings or price to book, depending on which segment they are in. So Max Financial is currently at a price to book of 2.6 times versus the 5-year average of 2.8 times. I don't want to run through the entire list. It's up there for everyone to see. But, most of them, in fact, majority of them are trading under the last 5 years average. So on the back of these factors, you've seen a lot of analyst interest that's been building up, and the fact that these 9 stocks present a good opportunity in the near term.
Well, they should be. They should be. It's interesting. There is a valuation pullback. Broadly, almost everybody seems to be suggesting that mid caps could be on the way up, and there are some telling names out here which have individual stock-specific beliefs as well. Stocks like M&M Financial, for example, what are analysts saying? Are the brokerages upbeat on these companies, because they usually don't have an ALM mismatch, M&M Financial, for example? Yeah, so according to IDFC Securities, they're actually saying for M&M Financial, the government's efforts to ease farm distress is expected to help this particular rural-focused non-banking lender, which will help to spur their offtake as well, so which could work better for them. See, they're not in any kind of a stress even at this point, but this is just help them, expand a little more. Okay, Devina, thanks so much for putting together an interesting list. And of course, you can read more about this story on our website, bloombergquint.com. As I said, this is the story. Analysts are bullish on these beaten down mid-cap stocks. My colleague Devina. Thanks for that, Devina. The next piece is on a stock which is in news today. Indiabulls Real Estate will be is the one that I'm talking about. because the promoters have made their intent clear on paring down some of the stake in the company to focus on the financial arm. The exchange notification comes at a time when newspaper articles suggest that Bengaluru-based Embassy Group and Blackstone are looking to take over the control of the company. Darshan is here with all the details. Darshan, so confluence of news, right, for Indiabulls Real Estate?
Yeah, so it's a known fact that, earlier also I think Samir Gehlot to the Economic Times had indicated that in order to get the banking license and focus on the financial services, they would actually go ahead and even not rule out selling stake in Indiabulls Real Estate. Now, in news that came in the exchange notification which they put out, what they've said is that at this point of time, the promoters' focus is running the financial companies and basically that's 90% of the revenues. Only 10% of their group revenues comes in from the other allied, especially real estate. And they say that as of now, they intend to dispose 14% stake in the company out of the 39% that they currently own. So that's the news. Now, two newspapers and PTI also, so that means three in total, have reported that the Embassy Group, which probably will be the front, and then Blackstone probably as a joint venture partner, will be looking to buy stake in the company. Now, Mint is saying that they will buy Gehlot's 39% stake for 2,700 crores, which values the company at over, at a 15%, close to 15% premium to where it is. And deal is likely to be completed in three transactions. 15%, which the company also speaks about, 14% which they speak, will probably be announced today itself. That will be followed by, over the next 6 to 8 weeks, another 14 to 15% stake, and followed by an open offer. Times of India also saying that there will be, Embassy will first acquire 14 to 15% from Samir Gehlot at 151 per share, which is a premium of 15%. Then they will buy another 15 to 24% in the next 4 to 6 weeks, and that will be then after that there will be an open offer for 26%. Gehlot family probably may retain a minority stake, and this is not the first time that there is a transaction between Blackstone and Indiabulls Real Estate. A property in Mumbai was sold, a property in Chennai was also sold to Blackstone. So they have been, and Indiabulls Real Estate is really focusing on, and they have been exiting certain commercial real estates and streamlining the process. This is very important for them because for long they wanted a banking license. The only way that they were not getting a license, they were always ruled out whenever the banking licenses were tied. The only way they could do it was an acquisition which they acquired and merged with Lakshmi Vilas Bank. Here also question marks have been raised whether this will go through or no, but this seems that they are forced to sell Indiabulls Real Estate in order to achieve the dream of becoming a bank.
Okay, just one small question. So how would the numbers shape up? I believe the promoters currently have 38.7% stake.
Yeah.
What the report suggests that Embassy, if they indeed go out and buy, will buy 15% very soon.
No, but Indiabulls Real Estate in the exchange notification said that they first intend to sell 14%. 14% of this 38.7%.
Okay.
So probably today the announcement that would come in, which both the newspaper reports will be for the 14% first, and then over the next 2 months you could see additional stake buying that could happen.
Okay, and then that could be followed by the mandatory.
Yeah, so 14% won't trigger an open offer.
Of course.
So,
right.
So it will be the cutoff of 14%, and then they will see it, and then once they buy that and they cross the 20-25% mark, then the open offer will follow.
Okay, viewers, please remember, some of these are based on newspaper stories. What is known is that Indiabulls Real Estate promoters want to pair stake. That Embassy Group or Blackstone will come in and buy is all based on newspaper reports, but it remains a stock that is firmly in focus today. Big newsmaker, had a big mover in trade yesterday as well. Let's wait and watch what happens today. Darshan, thanks so much for putting that into perspective. And of course, again, I repeat, a story around this would be there on the website, bloombergquint.com, so please log on and read about that. The last piece on First Word today. A 5-decade run of leadership at Wipro will come to an end on July 30th when Azim Premji steps down as executive chairman and managing director. The company he joined in 1996 and nurtured from a mid-sized cooking oil business into an IT giant and a BPO giant with $8.5 billion in revenue. Take a look at the journey of this tycoon. and there was a time when Wipro was nearly at par with two of the biggest IT companies in India, TCS and Infosys. Agam Vakil now joins us to take us through those details. Agam.
Well, actually, Neeraj, in not so very far future, it was actually almost at par. In fact, when comparison to Infosys, its revenues were slightly higher. And this was not back in the 90s. This was actually in 2000s. So if you actually go and see the way your revenues are panned out for Wipro in comparison to TCS and Infosys, at least until FY 2008, FY 8 or FY 9, that is when the revenues of Wipro were going side by side with Infosys, and in some years it was more than Infosys. And of course, it just so happened that much later, as we moved into the 2000s and then 2010s, that we saw a very sharp divide between the revenues of Wipro along with TCS and Infosys. But this was not the case when it comes to profitability. In profitability wise, Wipro was always number 3, even in comparison to Infosys. Even in years where it had more, revenues than Infosys, its profits were always lower, and that was possibly because of the fact that it concentrated more on the hardware business and not necessarily as much on the software business, even in the earlier years. So as you can see, as far as your earnings per share is concerned, well, Wipro and Infosys moving largely in tandem around the first few years, but as you can see here, we've seen a little bit of an interchange in the last, I would say for 4 or 5 years, but it was always TCS which took over when it comes to earnings per share. But moving on, let's also talk about market capitalization, and it was essentially profitability, which was relatively low as compared to TCS and Infosys, is the reason why we saw, well, the market cap for Wipro not rise as much as something like a TCS and, well, something like an Infosys. Of course, in the last 1 year, what we've also seen is Wipro lose out on the number 3 tag to HCL Technologies in terms of profitability and revenues, and that is also largely on account of the fact that HCL Technologies has grown much faster in compared to Wipro. That said, I must say that over the last 15 years that we have taken into consideration, it has grown at a rate of 14% CAGR, and that is quite substantial for any company out there, and that is something that the shareholders of Wipro will also take away as well. Azim Premji steps down from the executive position.
Well, I think the standout chart for me was the first one that Agam started off with, not so much in the distant past, that Wipro was neck to neck with Infosys and TCS. And then, I mean, this chart tells you one more thing. What TCS has done under Chandra is the other thing, right? We're talking about Azim Premji right now, but what TCS has done under Chandra is quite exemplary as well in terms of revenue growth. But just the fact that Wipro has probably lagged some of the others as well on growth rates or on absolute terms. Agam, thanks so much for putting that into perspective. Pretty interesting data, but an icon steps down, an end to what has arguably been one of the greatest careers that corporate India will see. That's all that we have on First Word today. Lots more lined up on Indian Open. Special conversation with Nimesh Shah, who is well, the chairman of AMFI as well, on how mutual funds may cope up with what's happening and what should investors do in a scenario like this. This is something that you can't miss in the session today. Of course, talk about markets with Nishal Maheshwari as well, but after this break, a full tilt towards the day's trade.